Let's say we have an established trend line during a downtrend. Normally, if price breaks out of a trend line, it signals a trend change to an uptrend, because a trend line break tells us that the existing downtrend structure has been broken. However, you can't just blindly enter positions when a trend line breaks, because price could form what's called a false breakout. This is when price breaks a trend line, making you think a trend change is happening, but it reverses back down instead. If you enter a buy position, you'll end up taking a loss. Now, there's actually a way to avoid this. So here's the trend line breakout strategy I use that's made me a lot of money. The first step of this strategy is to find an existing trend line. And in this chart, we can see that price is in a downtrend. And we have swing points right here that we can connect to draw a trend line. Next, we wait for price to break out of that trend line. Now, in order to know whether this breakout is likely a real breakout or a false breakout, we need to look for signs that the downtrend is getting weaker. And the way I do that is by analyzing market structure. Here's how it works. In this example, price makes a low, then it breaks that low, forming what's called a lower low. Shortly after it happens again, price breaks the previous low, forming another lower low, and then once more, price breaks the low and forms yet another lower low. This shows that price keeps forming lower lows, which tells us the downtrend is still strong. But now look at what happens before the breakout. We notice that price fails to form another lower low, instead forms high or low. This tells us that this downtrend structure was already getting weaker before the price broke out. Another key confirmation is making sure that when price broke out, the candle should close well above the trend line. Because again, we treat trend lines as zones, so we want to see a strong close above the trend line to confirm that price has actually shifted into an uptrend. So this is what I look for before entering a trade. Now it's important that we find higher lows. That's also followed by a trend line breakout, because in this example we see multiple higher lows earlier. But since they were not followed by a trend line breakout, they were not valid entry points. So to recap, first we want to see the existing trend getting weaker. In this case, price shifts from lower low structure to a higher low structure. Next, we wait for price to break out and close well above the trend line. Once these signals are confirmed, we take a buy position for stop loss, place it slightly below the trend line rate instead of take profit at 2 times the stop loss size. And as you can see, price went up and hits our take profit target.